So over the weekend in Pro, everyone, we spoke about the likelihood of the market coming back down and retesting the pivot down here, just shy of 24,000 on the Dow Jones Industrial Average. Today, as at Tuesday, the market has closed down 247 points, and it looks as though the tail, which established itself on Friday, is really starting to, again, come with a lot of selling pressure. Now, this is also coinciding with that 18 simple moving average, which is the midpoint of both the upper and lower Bollinger Band on the Dow Jones Industrial Average. Now, it's not only for this particular market, it is also very applicable and relevant to that of the S&P 500. As you can see on my screen, the S&P didn't close down as much percentage-wise, only closed down 15 points, but again, the selling is continuing from that of Friday last week. Today, we're left with that of a spinning top candlestick, once again getting rejected at this 18 simple moving average. Generally, after sell-offs like we saw at the beginning of February, the market will not create that of a V-bottom. V-bottoms are very rare, and they are also highly complicated, almost impossible to actually trade off from if you are that of a swing trader. Generally, what we look for is that of double bottoms. And again, this is intertwined with the simple fact that generally markets themselves, not only indices, but also individual shares, will generally retest that pivot on at least 2 occasions. Now, again, this can set up more touches than 2. It can be that of 3 or 4, which again will stem into different variations of chart patterns. But what we really want to establish at this particular point is that of a sustainable intermediate, if not macro support area. I am identifying, again, on the Dow Jones Industrial Average, that area coming up at around 24,000, anywhere around or in that vicinity, that general vicinity. And again, you can see on the S&P 500, just here shy of 2,600. You can see on the candlestick going back to Thursday and Friday last week, as we really drilled into the first instance of this support area, you can see this really long established support area. This is coinciding with buying pressure. So very similar to what we saw on Friday, with the selling pressure taking place around the 18 simple moving average, the midpoint of the upper and lower Bollinger Band. You can see price got outside that lower Bollinger Band, which coincided with buying pressure, which is that lower wick on the S&P 500. And it is also here on the Dow Jones Industrial Average. So as we move into the next 3 days of session to round out this shortened trading week, pay attention to the markets themselves. They are going to most likely be rather volatile. We can see, of course, bounces take place, but we should see overall the net movement on this shortened trading week being that of a net losing week. That is going to set us up for our trading plans moving forward. I do believe we are going to have a fantastic opportunity to start legging into diamonds, Qs, and SPY positions at lower prices. It is a little foolish right now and short-sighted to be buying the market. We do have multiple areas of resistance, and again, it's very rare that we see markets create V-bottoms after such abrupt and sudden sell-offs. It is also, again, just to reiterate, very complicated, if not impossible, to actually position yourself as a swing trader to take advantage of these very quick bounces. Generally, we will retest these areas. Now, again, this is the NASDAQ on my screen here. 6,900 is the area that I'm paying attention to. And just to continue this discussion, you can see these upper wicks again stemming on Friday. You can see that the NASDAQ, or at least intra-session, it was a little bit stronger than that of the industrial and the S&P 500. However, we have once again closed with this upper wick. So we have 2 variations of shooting star candlesticks, if not gravestone dojis, which again are just showing us the resilience of sellers up and around roughly this 7,275 pivot on the NASDAQ. So allow these markets a little bit more time to breathe. It is most likely going to be a rather volatile period. This week, it may also continue into the following week as well, but it is going to come with, of course, some great trades as we round out the month of February, but also as we continue into or further into 2018. If I can continue with this discussion also, the US dollar has been making some pretty interesting moves. This looks as though we do have a double bottom. I like these types of trade setups. We spoke about it over the weekend. For those of you who are positioned in UVX, it's a fantastic trade. My resistance areas are still coming up around here, 91.50 up to 92.50. That is going to establish once again potentially that next intermediate lower high, which is going to set the stage for some really decent breakouts, which look to be under construction for both gold and silver. If I can bring up that of gold, as the US dollar rallied today, it's no surprise that GLD sold off. So you can see for yourself that we are coming back down to retest this 124 pivot, or about this 124.60 pivot on my screen. So if you missed out on the trades earlier in the month of February, there will be a nice opportunity for you to leg into call options on GLD and SLV. If I can really draw out and zoom out into the weekly chart, you can see that we've got all of this open space all the way up to about $150 on the ETF for GLD. This is going to come with some pretty decent profits once we see that terminal reversal take place for GLD, sorry, not GLD, but for the US dollar. If I can go back into this chart, if we start tying in, of course, the oscillators, they are a little bit choppy at the moment, but they are sort of hammering out that of divergence. You can see that as we've drilled back in to make this double bottom, the MACD is firmly turning up. So again, this is coming with that intermediate move back up into the macro declining trend, which appears to be, again, continuing on the US dollar. This is a counter trend move under construction. It's not a long-term sort of sustainable move. This is going to take us up most likely above this most recent swing high earlier in the month of February. But once it fizzles out somewhere in this general vicinity, we can rally all the way up to roughly 93, if not 94 as well, as long as we do not eclipse, of course, the highs in October and November. It is going to continue to remain to be a macro bearish sort of environment for the US dollar. And with that, again, just to bring this full circle into SLV, it is going to set the stage for some pretty decent profits, or at least higher prices for commodities in general, as the US dollar continues to sell off after this most recent strengthening, which is underway at the moment. Now, if I can go into some of these individual trades, it was a relatively volatile week last week in Pro. Some of the trades actually rallied very strongly, much like the markets. Others sort of fizzled. It really is sort of a collection of sort of 25, 75, 25%, of course, rallying. The other 75 have been rather still and stagnant. But as you can see, even with Apple, again, very much like the markets, we've got two consecutive candlesticks now, Friday and Tuesday being today's session, with two upper wicks right at this resistance area. Now, I didn't shake the trade at 158. It rallied very aggressively, but it looks to be sort of slowing and if not beginning to reverse up at this resistance area at 175 on my screen. So pay attention to this. We don't have an actual trade set up for this week on Apple. Again, the same is true for Amazon. It's the first time we've come back up and retested this resistance area that we have created earlier in the month of February. This is the second occasion now, and again, it's coinciding with that of an upper wick. So we're starting to see a little bit of uniformity across the board with the stocks that have been actually rather bullish in the face of a rather sort of weak market over the past 3 weeks of trading. Boeing Airlines is really the third share on my screen. It's also the third retest of roughly this 353 pivot. You can see again, we're pulling away from this resistance area. We do have this insurance policy above 365.65. This is good now because we do have three touches and we are starting to see resistance form. So if the market does continue to accelerate, this 365 trade breakout is still a pretty decent setup. However, I don't believe it's going to actually trigger this week, as I am rather short-term bearish on the markets, coming back down to actually establish that second double bottom, or at least the second side of that double bottom. Now again, Baidu is still stuck just below 250, no surprise there. Caterpillar is slowly rolling over. Again, I think it's going to come back down to about 146, 147 and retest that support area. Again, COP rather stagnant. It really didn't go all that far last week. On Wednesday, it did see a pretty aggressive update, but that was really it. And again, today only up 19 cents. No trade triggered on COP at this particular moment. CVX again still moving sideways. You can see how we are sort of creating that of a short-term pennant. However, I do believe we are going to hold this pivot just above 108. And then when the market comes back down and tests that support area, that's going to be the time when we start bringing down the 118 trigger down to about 114 as well. So allow this a little bit more time. It is going to, I guess, continue to develop. It's not ready yet, but it will be ready maybe in about a week's worth of time. Google is still trying to push on up. Again, this was largely attributed to the strength in the NASDAQ. We closed up just shy of $10, but there is no real structure with this trade setup. It does reminisce that of the broader markets itself. We do still have an upper wick, but even as we look at Google, and if we are to sort of anticipate or try and break down any bullish opportunities, we still have this open window here, which is going to act as resistance, even if we can push on back up to about 1125, even as high as 1175. So it's not ready yet. I believe this is going to be the perimeter, the support perimeter, and also the resistance perimeter. And like much of the markets, you can see that we are starting to find resistance at that declining 18 simple moving average as well. So you can see the actual rhyme of the market and how it is working in harmony with individual stocks. It does take a little bit of time for this to work its way through the system, but collectively you should see prices fall, and that's when we'll begin acting with these markets further into 2018. Goldman Sachs, really not a lot to talk about in this particular stock. It is violent, it's choppy, it's disobedient. It's something that you want to avoid at this particular time. IBM, the same is true with this. You see the shooting star on Friday. We have a little hangman at resistance. This is interesting because there could be the potential of a back test of this decelerating fan line. Again, not enough information to trade off at this particular moment. And as I sort of recap Netflix at this particular moment, it's very similar to that of Boeing Airlines. Again, coming back up into this resistance area, and also very similar to Apple as well, which has more actual touches on the resistance than what Boeing Airlines does. As you can see on my screen, we have 5 right before your eyes. So if I go back into Netflix, you can see that this is the second opportunity, or at least the second retest of this resistance area. It's going to be quite interesting if we can come on back down, and there could be the potential for that of a double top. The problem is that the macro trend of Netflix is still bullish, much like the broader markets themselves. So this is essentially counter trend, and that's why I'm not really all that inclined to actually speculate below 266. Although I can actually see it occurring, the trade at minimum would take you down to 250, but it is counter trend. I think we are going to see the bounce and the holding of this support area, and that's going to again act as the impetus to push these markets and these individual stocks higher. Tesla, to round out, as at Tuesday, you can see again a sort of an inside day type of candlestick. It is more or less within the entirety of the trading activity which took place on Friday. A little bit of a high wave spinning top, but again, the perimeter, or at least the structure of the trade, it's simply not there, and you should be leaving Tesla alone. So a little bit to recap, as at Tuesday, I have been rather quiet on the markets. I have been, of course, boisterous each weekend in pro. We've expected the sell-off. We spoke about 26.3 on the Dow. That position held. Now we're going through the ebbs and flows of the market until we can really set up some really nice trade setups moving forward. Now, having said that, we still have opportunity on the US dollar strengthening. And also you can, again, begin accumulating, not necessarily immediately, but think about the long-term sort of trend direction of GLD and SLV and the broader commodities markets moving forward as well, because I think there's going to be a lot of long-term opportunity if you can structure derivative contracts for about June expiration. You'll be looking at an absolute minimum May expiration, but the longer you can actually get in the money strikes on those options, the better those trades are going to work out, and the longer you can hold on to them as you take advantage of the trend direction, which is very important at this particular moment. So on that note, everyone, if you have any questions, please email me, success@pivotpoint-trading.com. Until next time, be well, stay well, and I'll see you very soon. Goodbye.